see. I think if you compare, I think it's this one to Tom's, I believe. I think it was a little bit more obvious.
Well, and what he did that helped him, which is a good thing for that, he stretched his scale more. Yours was very scrunched up. Spread the scale. For example, this is very scrunched up. This is very hard to see. You got to spread your scale. Then that's probably why you were missing them. Does that make sense at all?
Yeah, definitely. That's what I was trying to figure out, because
I think you had it like this. Very hard to see.
Yeah.
So just spread your scale and you'll be like, oh man, I missed. Then they all become obvious. That's why his looks more obvious. He spread his scale better. Is that cool?
His valleys and peaks are more defined.
And that's the only reason why. Yeah, Bill.
Do you only pay attention to hold levels inside fair value gap?
I give them much higher importance, and to me, it makes them tradable. If I mark a muddy level, I'm almost marking it just to mark it. And if I decide to trade a muddy level, it's at the smallest leverage possible. For example, here's a hold level that I think would classify as a muddy level. Why? Because the very next candle wick, it's not in a fair value gap.
And what would you do with a level like that?
Well, it's kind of funny. It still bounced perfectly and beautifully. And as I said, I would mark it. And if I was to trade it, I would trade it on the smallest leverage possible, because it's not as clean and beautiful as this front side hold level inside of a fair value gap.
So you'd be looking for collaborated data for some other reason, wanting to trade that muddy level.
That would be absolutely. Yeah, let's say with that muddy level there, the happened to come right underneath it here, and you go, oh, that's great. Or maybe we're laddering up and it's the second or third ladder up. I'm going to go, hey, trend is strong. Level's not as beautiful, but I want to be in this. This would be the perfect entry because I'm laddering up. Does that make sense? But if it was a muddy level, completely counter trend, I'm probably not taking it because there's easier trades.
Got it. Thank you.
So let's say we had a level from way back here that was a muddy level. We're laddering down. I'm probably not going to take that muddy level trade at all. But if we're laddering up and the only level that's going to get me in the trade is a muddy hold, I'm in. So price action sort of dictates that. So I know that all makes sense. Is that cool?
I have a comment about hold levels that are a ways back.
Yep.
I find it confusing to have all my hold levels looking the same, whether they're potential longs or potential shorts. Have you ever thought about marking hold levels with different indication for those that would be long entries versus?
Because it's just this simple. Let's say I had a line here and I had a line here. When I touch the line, it's going to bounce. I don't think I need a different color. I know what it's going to do. It's going to bounce. So old lines from way back, way up here, I know it's a short. Otherwise, once it has been bounced or prices went through it, I've deleted it. So I know anything above my head is shorts. Anything below my feet are longs because I've deleted the tested levels.
Yeah, so I don't follow that. I believe that you could have hold levels below your current price that would be only short entries, meaning that it has to cross it and come back up to it.
You would have to show me an example.
Okay, I'll look for one and show you.
Right now, I can't wrap my head around it. I don't believe that would be true. I don't believe I would have an existing line on my chart down here that was meant to be a short. And the reason why is because at some point, price had to go through it. At some point, the only way price got up here is price had to go through that line.
So could you look at 1430 on Friday?
Okay. 3-minute chart. 1430. Okay.
1430 is a blue candle.
Yep.
It's a front side, potential front side.
All right. This right here.
No. Well, no, I was actually looking at the one before that, but that's fine. That's a good one.
That is the front side.
So that's not a long.
That is a long.
Oh, you're right. Okay, so mark the backside of the white candle before that at 1433.
433. Okay.
Mark the hold level.
That's not a.
There'd be a break level.
I know it's not a hold because it hasn't been validated, but it's a potential short if it gets validated later on.
No, sir. It would need to have been validated in this run right here. My opinion.
So you keep down below that now, and then came up. You wouldn't take it.
Then it becomes activated. So then so let's follow your example through.
Okay, so now go to the current. Yeah, go to the current place.
The price comes down here now.
Yep.
Only at this moment would this become a validated backside.
That's true. Saying is you could mark that.
No, you better not. You're going to mess up your chart. You better not mark that.
Why does it mess up my chart?
For the exact reason why you're trying to complicate your markings. There's no sense in complicating your markings. And down here, I'm going to make these a different color. And up there, I'm going to make those a different color. Why not just do it the right way and say, I'm not going to draw this line until it's activated? Yes, that's a potential backside. This is a potential backside. I'm not marking these because one day they might be potential backsides. Don't hurt yourself. Don't do that. Because this might be a potential backside, but don't mark anything until it's activated. And if you do that, your lines will be perfect. Anything down here is a long, anything up here is a short. Yeah, don't mark anything that might be a potential level one day when price comes down here. Yeah, don't do that to yourself, man. So 2 things, do not premature mark a line. And 2, once they're tested or, prices went through it, delete it off your chart. One of the worst things I see is people leave lines on their chart. And I know it because they'll call out in the room, oh, George, I got a line at 38.92. And I'm like, no, you don't. And they all go back, oh, yeah, that's been tested. Yeah. Remove your tested lines and don't put, boy, this is probably a great little topic that I need to put in our group. Yeah.
So one of my observations that when there is a strong support, price keeps bouncing on that support several times.
Yep.
So the first bounce would eliminate that break level, right? So what do you do subsequently if it's a strong, like this one, right? You marked. So the first bounce would say, okay, it's been tested, but it comes back again and then bounces because it's a strong support. How do you treat that?
I only trade the very first bounce.
Okay.
Your mileage might vary. You might say, I'm going to keep doing it until I lose 2 points. There's nothing wrong with that. I just play the first bounce. I want the highest probability trade.
So the second bounce, you'll only mark the whole level.
So in this particular case, you would have had that break level marked. I would not remove this break level until candle has fully closed down here. I would have marked this hold level here and you would have went long on this wick.
Okay.
You had 2 candle separation. There's your perfect long.
Right. And you would mark only hold levels from there on if it keeps hitting the break level.
Yeah, I'm not moving this break level until it's officially broken.
Just got a hard close below it.
A hard close below it. We want a full candle to close beyond it. And I'll be honest, if a full candle closed beyond it, then it immediately went back up here, I'm probably going to keep it because it didn't really break it. So, but hold levels, as soon as it touch bounces, I'll be on it. Let me mark that correctly. That's a solid line. As soon as it touch bounces, I remove my hold levels, but I'll keep my break levels until they're really broken.
Now,
And
if
I've
it
learned
hard
that.
like for example, just one bar and then boom, it goes back up again. Would you just change the break level to that new low?
I might readjust it. All I say, you know what? All they did was readjust it, but I wouldn't trade it again. You got to be careful that you're not creating a new trade for yourself when it's not a new trade. So if
Okay.
so if this one had went this far down and came back up, I'm not adjusting this break level. If one candle entirely closed, the next candle entirely closed, I'm not going to say that, but here and went back up, I don't think I need to adjust this yet. If anything, I just know this is stupid weak. I don't want to be longing down here because if you readjust this to here and this gets off the screen, you might be thinking, oh, I'm going long right here.
But it's already been tested essentially.
Yeah. Yeah. And you go, no, because the real level's there.
So George, that's interesting because that's the ICT concept. Says that was a order block that was taken out, and according to ICT, your entry is at the top of the order block. So that would make sense.
Yeah, the cotton and ICT work very well together. Okay. Any other questions there? First of all, Bill, did we really answer your question?
Well, you answered my question, but I don't agree with the answer. I guess.
No. Well, if you come across an example, let me know. But as a general rule, I would not prematurely mark a level. And once the level has been tested or violated, you need to remove it. And I believe with those 2 conditions, anything down here will be a long, anything up here will be a short. And if you come across a situation where that's not true, I'd love to see it. I haven't seen it in 2 years.
No, the only example will be the one we looked at, which is there's a potential short hold level there that could be validated in the future.
Yeah, and that's why I don't mark anything that hasn't been validated, because it keeps everything straight. It keeps the only lines on my chart are lines I will trade, or there are break levels that have not been broken. So if I have a solid line on my chart, I know that's a tradable line. I just know it. It hasn't been tested. It hasn't been violated. That's the only reason it's still on my chart. And on a break level like this, once it's been hit several times, how I protect myself, you put the word tested. Now,
George, I can see one example. May I?
sure, go for it.
1415.
1415. Let's go to 1415. 14. All right, what am I marking at 1415?
So a little bit to the right. So that's if you're looking at the price level coming from this side, this would be a break level.
So let me draw what this is. This is a hold level. And we got a break level here.
Right. So if now you're only thinking shorts, but price goes through.
Yep.
And you take that level off.
Delete.
You keep the break level, but you don't take the break level off. Okay. Now, as price goes up, that starts to become you form a new valley and
Right.
price goes up. So to Bill's point, would that break level, if you kept it, could that become a?
It was broken.
Yeah, but what Bill is saying is that if you keep it, could that be a level later on to be referenced?
Guys, my core strategy exists because it avoids so many possibilities that you guys are coming up in your head with. I don't understand the thinking. Now, here's what happened. Price went up. This break level potentially became a backside.
Right.
Two candle clearance.
Right.
You had one candle clearance. So this would have never been an activated backside.
Okay.
It
That
gets
clears it.
deleted. The break level gets deleted because we've clearly went away from it. So it gets deleted.
Okay, thanks.
I promise you, if you stick with only draw when it's activated and remove it once a hold level's been tested, remove it. And once a break level has been broken, delete it. There will never be any confusion on your charts. The last thing you want is to have any confusion on your charts, because one day you'll show it to me and I'm like, you've got to delete everything and start over.
So when we are doing that's the confusion, which is we are just marking all the levels that have happened, but in real time, we'd be deleting those levels as price keeps moving.
Well, and the other way to do homework is you scroll back and say, hey, I'm going to start here. And then you turn on the replayer tool if it really confuses you. But yeah, some of the back testing is confusing because you are, and you just go candle at a time and you mark. That's the easiest way to get rid of any confusion you said you might be experiencing, is you mark them you do it one candle at a time on a replay model. That's more time consuming. But the only reason you're doing the homework is because I want you to have done it. That's like practicing your sheet music before the concert. And the more you practice that sheet music, the more confident you will be in live trading to do the levels. Man, that's really great. Hold on. I need to put this on my to-do list, because there's a reason that all to do. 1, do not mark potential levels. I'll share you a story in the other group. He, has been learning this system too. And his number one mistake is prematurely marking levels and trading them. We discovered that in the small group last week. His number one mistake is prematurely marking levels, which means he's marking levels that have not been activated. Mark only levels that have been activated. Remove holds after 3 tick touch. So if it comes within 3 ticks, remove it. Remove break levels after hard close. All right, that's on my to-do list, things for me to look at later. Okay, can we move on? Is there any questions or further discussion on that? Because that was fantastic. I would not have thought people were going to mark potential levels. So that was great.